Hello everyone. Introduce me to the admin of the YouTube channel about business. In this video, we will discuss a very interesting and relevant cost of goods sold. Have you ever wondered how cost of goods sold can influence the effect of cost of goods sold on a company's? Let's explore together in this video. In this video, you will learn some effective strategies for factors considered in analyzing a company's that you can apply immediately after watching. Cost of goods sold, COGS, is the total cost incurred by a company to produce or obtain the goods or services sold. Cost of goods sold includes direct costs associated with producing goods or providing services, such as raw materials, direct labor, and manufacturing overhead. Cost of goods sold is important in calculating a company's gross profit. Gross profit is obtained by subtracting the cost of goods sold from sales revenue. In this case, the cost of goods sold represents the costs directly related to the production of the goods or services sold, while the sales revenue represents the amount of money received from the sale of the goods or services. It is important to note that the cost of goods sold can vary depending on the type of business and operating model of the company. For example, for a manufacturing company, the cost of goods sold would include raw materials, direct labor, and production overhead. On the other hand, for a service company, the cost of goods sold may include direct costs associated with providing the service, such as the salaries of the employees involved in providing the service. Cost of goods sold can also include other costs related to sales, such as transportation costs, storage costs, and marketing costs. However, these costs are usually considered separate selling and administrative expenses, as they are not directly related to the production of the goods or the provision of the services sold. A good understanding of the cost of goods sold is important for companies in managing and controlling production costs, calculating gross profit, and determining the appropriate selling price for the products or services offered. The effect of cost of goods sold on a company's stock value can vary depending on several factors, including the company's industry, overall financial performance, and investor perceptions. Following are some of the ways in which cost of goods sold can affect stock value. 1. Gross profit. Cost of goods sold affects the gross profit of the company. If cost of goods sold increases without a commensurate increase in sales revenue, gross profit will decrease. This can reduce a company's profits and send a negative signal to investors. A decrease in gross profit can affect the share price and trigger a decrease in the share value. 2. Operational efficiency. High cost of goods sold can indicate a lack of operational efficiency of the company in managing production costs. Investors usually appreciate companies that are able to generate profits with efficient production costs. If the company succeeds in reducing the cost of goods sold or increasing its production efficiency, this can increase profits and positively affect share value. 3. Price competition. Cost of goods sold can also affect a company's ability to compete in terms of the price of products or services offered. If the cost of goods sold is low, the company may have a competitive advantage in offering lower prices to consumers. This can help the company gain a larger market share and improve future growth prospects. Conversely, if cost of goods sold is high, it may be difficult for the company to compete at lower prices, which can negatively impact share value. For investor confidence, the level of cost of goods sold can also provide an indication of the company's risk management and management quality. If the company is able to control and optimize its basic selling expenses, this can reflect good management and generate investor confidence. Investor trust can affect market perceptions of the company and in turn, affect the value of shares. It is important to remember that the effect of cost of goods sold on stock value must be looked at in a comprehensive manner, taking into account other factors such as market conditions, industry growth, overall financial performance, and company policies. Careful fundamental analysis is needed to understand how cost of goods sold can affect a company's specific share value. For investors, the cost of goods sold is one of the factors considered in analyzing a company's financial performance and evaluating investment value. The following are some of the things an investor might consider regarding cost of goods sold. 1. Profitability. Cost of goods sold can affect the company's profitability. Investors will see a comparison between the cost of goods sold and sales revenue to assess the company's operational efficiency. If the company is able to generate high profits with a proportional or low cost of goods sold, this can show good profit potential and be attractive to investors. 2. Profit growth. Investors tend to look for companies that can increase profits over time. Sustained profit increases usually reflect healthy business growth. In this case, investors will pay attention to whether the cost of goods sold increases in proportion to the increase in sales revenue. If the cost of goods sold grows faster than sales revenue, this can raise concerns regarding cost management and the impact on company profitability. 3. Industry comparison. Investors often compare a company's financial performance with industry competitors. Industry comparison analysis involves examining financial ratios and other performance metrics to see how a company is performing compared to its competitors. In terms of cost of sales, investors will compare the ratio of cost of sales to sales revenue between companies and competitors. If a company has a lower cost of goods sold ratio than its competitors, this can be considered as a competitive advantage and profitable from an investor's perspective. 4. Price stability. Cost of goods sold can also impact the price stability of a company's products or services. If high cost of goods sold affects a company's ability to compete at competitive prices, this could have a negative impact on sales revenue and long-term profitability. Investors may observe changes in the price of a company's products or services and relate them to the cost of goods sold in order to evaluate the impact on company performance and investment value. It is important for investors to conduct a thorough analysis of the company's financial performance, including the cost of goods sold, and compare it with similar companies in the same industry. Thus, investors can make better investment decisions based on a more complete understanding of the factors that affect firm value. So, in this video we've covered cost of goods sold and explored cost of goods sold. Now, it's time for you to apply some of the strategies we've learned. Feel free to share the results with us in the comments section. If you enjoyed this video and want to stay updated with more interesting content, don't forget to subscribe to our channel. Thank you for watching this video and giving your attention. We really appreciate it and look forward to seeing you in future videos. If you want to explore more about cost of goods sold, don't miss our related videos in the playlist available on this channel. If you found this video useful, please feel free to share it with friends or family who may also be interested in this cost of goods sold. Now it's time for me to go. See you in the next video. Stay connected and take care of yourself.